Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. So, by the way, were you able to hear the music on the intro there? That's one thing I can't really check to make sure that I got that all set up right. Anyways, day 2 here with the new machine. I think we got things set up a little bit better here, so let's see how it goes. Let's go over to the charts here. Did fix my charts up a little bit. I don't have, I used to have like 12 different charts down here, but a lot of them didn't actually visit very often. We'll see. We'll pull them up as we need them. But so here's ZN. And not too much activity in the overnight, but it's there. We are at the moment kind of on the upswing again. And yesterday it did end up being a pretty decent buy day. 5-year auction went well, and they just very gently moved up with that. It was actually very much like what I felt when we were actually watching it yesterday, which was like, hey, it's going to go up, but like it's going to take forever. So it's probably not worth it for me to take a trade. Yeah, that's exactly what happened. Now here you got the S&P 500. We are on the downside here in the overnight action. So that's a little curious. Oil seeing a pretty good rally yesterday, but some of that coming out here quite recently. Gold and silver still looking pretty okay here. Probably need to zoom out more, but. And Kappa trudging along there as well. Still got a ways to go to get above September highs though. And we'll take a quick peek here at Bitcoin. Bitcoin doing okay. Nothing too interesting over there. And then the dollar index, I guess I'll come back over here. The dollar index seen a bit of a plunge here more recently, so we need to look into that. We are seeing the Japanese yen rise here and gold rising. So we got something going on here that I'm not aware of. Let's come in here. First of all, make sure that my news squawk is going. We didn't have any bottom of the hour news today. We do at the top of the hour, we get US Red Book and Case Shiller. Then we got a bunch, and I mean a bunch of Fed speakers. I don't know what, so let's look at this. Is this an event? Waller due to participate in a moderated discussion about the economic outlook and monetary policy at the American Institute in Washington, D.C. Audience questions expected. Bowman will be speaking about monetary policy at the Utah Bankers Association breakfast in Salt Lake City. Bowman is here and I didn't know. Oh my gosh, I feel so dumb, guys. Still have time to make it down there if I could get... probably not. I'll look it up though. That's at the very least. That's something going around here that I didn't know about that I wish I did. And Barr is going to be speaking a bit later in the day. The Community Reinvestment Act is on it. Okay, so I think that what is it, Goolsby? Now, I don't know about Goolsby, but Waller, that one, it's very likely for him to say significant things. Also, we got CB Consumer Confidence and Richmond Manufacturing Index at 8 o'clock as well. So, lots of things going on at 8 o'clock. It's one of those days. So, we may see some flows, but then, there's going to perhaps be some somewhat restrained trading up until that relatively significant news release period. move rhythmic over here. What happened with indexes yesterday? I don't know. You're talking about how like pretty late in the day it just like absolutely plunged, right? I don't know. There was no news, so I when there's no news, all I can do is assume that it was endogenous. So I think we had some sort of an endogenous move, perhaps. I mean, the market on close imbalance did end up being a sell. So maybe people were starting to catch wind that it was going to be a sell imbalance, and that's why it happened. Didn't really get anything else. You know, maybe I tell you what, sometimes I get so absorbed in what I'm doing lately that I don't completely... Traders trading, yeah. Because I guess you could call it that, yeah. I just sometimes I don't feel like I'm completely up on everything, you know? Like I don't remember Zero Hedge, I don't think mentioned anything about it in its market recap, did they? Let's see. Let me go back. Black Friday was mixed according to reports. Okay, so I want to talk about this, by the way. So something that you need to realize about Black Friday numbers is that the amount of information that you can actually compile, within a day is a little bit limited. And not only that, but retailers kind of have an incentive to present a certain face about their sales to kind of convince people that like they need to do all of their shopping now. Because if it comes through and like, oh, Black Friday was really, really awful, then everybody's going to say, oh, that means that they're going to be behind and they're going to offer more really good discounts later in the month, right? They don't want you to know that. So don't make big conclusions about the holiday shopping until it's later in the month. You know, after a week or two, to get a much better idea of how strong the consumer is from that. So, it doesn't mean that the information that you're getting right now is bad. Just you got to take it with a grain of salt, because I've seen very many times where it was like, oh, Black Friday was so great, and then later ended up being a terrible holiday season. I mean, I've been doing this I've been watching these since 2008, so I've seen it go all sorts of different ways, and what I found is that the stuff that you get just off of Black Friday does not always tell the whole story. And by the way, we did have a little bit of a spike there in the treasuries too. Pretty strong correlations coming through here. OPEC, I don't know, is OPEC doing something? Because I'm seeing oil move. News Squawk. Adobe on Cyber Monday sale says buy now, pay later usage hit an all-time high in the US, contributing $940 million in online spending. You think I want to sell the ZN highs? I don't know. I'm not. So I don't think that I have anything telling me today, like a specific flow, telling me that they're going to buy or sell it today. I think that if I did have a flow, I would be leaning towards the how do I say? I'd be leaning towards the overall trend, which has been higher, right? I think that the CTAs are kind of tilted long to some extent. So if I were to take a trade in that direction, I think that I would prefer to go long. See a little bit of divergence between the note and the bond. I'm not seeing the spread move yet. But to keep an eye on that. Interactive poll has released a poll showing Trump now up 50 points in the primary. Good grief. Oh, that shouldn't surprise us. So the primary, that shouldn't surprise us. Nah, I think I would prefer to on the continuation trade, but I am starting to feel like that interest rates are getting a little bit too low. You know? Yeah, no edge right now, says Octavius. I think you're probably right. I don't know if I really have an edge. I can definitely see. I think that you're picking up on totally that there's like a spot where I could potentially do something, right? Because what's happening is you're getting a little bit of a volume node here before anything really happened. So I would expect, or I shouldn't expect, but that could be a large meta order is starting to come through and hasn't really started yet, and that they will push it. But I don't think that it will be a reversal. Let's see, though. Gold is really taking off here, as is the Japanese yen. So I need to come back over here. Okay. OPEC Plus, no closer to a resolution on Africa output, says delegates. That was 10 minutes ago. So what we're seeing right now could be related to OPEC moves. That was why oil sold the way that it did. Yeah, pretty much all of the headlines I see over the past 5 minutes are just all about OPEC. I don't know. Good morning, Tiger. I didn't say good morning to Dewey and Dan either, so good morning. NASDAQ. Yeah, so I was just double checking there on Zero Hedge. They didn't say anything about that late selling in the S&P 500. That was kind of odd, but okay, they did fall back down there a little bit. What I see was there was a node at like 9005. We spiked up 2 ticks, traded quite a bit there at that spot. They've ticked down once. So it seems like something's going on. I'm not able to tell really if like it's going to continue or not. So this is kind of the problem. So I really don't like the new start menu. The older one was way better. What they pinned to the start menu is really weird too. I don't need that. I don't need that pinned to the start menu. Like, why? Why? Yeah, not a big fan of Windows 11. What I don't understand is why Microsoft continues to make significant GUI decisions that are objectively negative for their primary audience, business users. Like, and they seem really tiny, and so maybe it's just that their UI people don't understand. But it's just like, if I'm going to have a bunch of windows tiled like I have right now on my screen, and they're all rounded, then every time that those windows come together, there's going to be this little space there. And it looks hideous, right? It was like the people they designed it for are not the serious users. And then it's the same thing like when I do my start menu, there's applications that I start. I want to have a lot of good stuff here on this screen, and I want it to look nice, and it doesn't. It's just became like another. It's like a drawer to put app icons. Okay, well, the treasuries slipped back down. I wouldn't say that it was on strong volume. I did see the Japanese yen flip around. And oil coming back up and the dollar moving. So I think that this is all just happening from the dollar. I'm not entirely sure. I don't feel that I have a really clear edge here though. At the moment. So I'm gonna see how that the dollar moved up. That was when the treasuries moved down. It's all very closely correlated with the dollar at the moment, I'd say. And that may be because of the OPEC stuff. I'm not entirely sure. Last good Windows was Emmy. Well, I don't know. Like the thing is that there are some the thing is that there are some really good things about Windows 11, especially from a technical perspective. It is time to start moving over. I don't think that they want people to move over just because they want more money or something like that. I think that there's like security concerns with the older versions and stuff like that. But it's just like, okay, sure. If you like the look of rounded corners, then make the default rounded. That's okay. It's just like have the option. Why didn't you just include the option? And it's just tiny little oversights like that, or like not being able to group the icons on the taskbar. Like it took them like 1 or 2 years to add that feature in. Like why? That's crazy. So I don't know. Maybe the next Windows will be better in that respect. They'll think about that stuff better. It seems like there has been a big shift in Microsoft lately because of the success of Visual Studio Code, that they might change their approach to the main operating system, and Windows 12 might be different. I can only hope. All that just to complain about, you can't even really see it, but when the start menu pops up, I just don't think that the new start menu is that great. I don't know, maybe I should go back into the personalized settings and see. The other thing is there's so many of these white ones that I'm like, why? Well, that's what I was using. Does this one give me like transparency or anything like that? No. Nope, I just stick to the super boring. And then where's the you can browse themes on the Microsoft Store. Let's do that. Okay, the treasuries came all the way back up there again. This is definitely going to be like a stay out for me. This is definitely a stay out for me. Background. Where did I put my background? Oh, it wants me to choose a folder. I don't want a slideshow, just to pick that. There we go. Show most used apps. See, why is that off by default? I think I already changed the taskbar. You see heavy buying in the twos. Well, we're right smack dab in the middle of the range. So I suppose if I really wanted to buy, this would be a pretty excellent spot to do it. But I really don't feel that I completely understand why the market is moving the way it is at the moment. FX Street News, reverse of Japanese yen and Chinese yuan underperformance will add to US dollar headwinds, says Scotiabank. Forex Live, a breakdown in OPEC would have broad macro effects. Okay. When I say I don't understand what's going on, I do think it is oil. That seems to be pretty clear to me. It's just how it's exactly affecting the flows over here, I'm not entirely sure of. Like, I think that we saw OPEC, that happened, and then the dollar dropped. That created flight to safety flows in the Japanese yen and the treasuries, which are kind of falling off quickly. But it's not resulting in active flows in the treasuries. It's very much passive flows following with the correlations. I can't really see the volume in the dollar to see, okay, is it money coming into the dollar like correctly or not? NASDAQ says fund/bullish dollar bets in half. Well, I suppose that doesn't surprise me because the dollar is really declining. Now that's interesting here is that they're now decoupling because the dollar is down towards its lows. And the treasuries are not bidding back up. In fact, the treasuries are kind of starting to wane here. And the Japanese yen is not going along with it either. So it looks like that this more recent drop is coming more from the euro than it is the Japanese yen, and so the treasuries aren't following it. So I do think that's more evidence that the treasuries are just following correlations with the Japanese yen. Anthony Crudelli says market stalling. When the market starts to stall in a trend, it will almost always start to show signs of mean reversion, and that's what we're seeing right now in U.S. indexes. 5-day moving averages have caught up to current pricing, and the daily Bollinger Bands have blah 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 blah. Well, yeah, that's true. This is one of those times where you have to look beyond the charts and take other factors into consideration. Pure technical analysis believe the charts are always right, and although it's hard to argue with that type of thinking as a trader, I understand that there are environments where signals don't work as well. I've battled the markets too many times trying to force my will upon the markets and never win in those battles, and I come out mentally and physically exhausted with less capital. How do I approach a tape that is showing signs of weakness only because the markets have stalled, small or not at all? it predict future flows. That's what I would say. Let's see what he says. I'll watch the 3-minute opening range and observe how the market trades around it. We'll draw horizontal and some technical analysis bullshit. Blah, 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 blah. In this tape, it's important to be small and smart. Well, that's true. He is really correctly, I think, identifying like the context of the market with indexes that we're kind of in a little bit of a mean reversion place, but we're seeing like some real flows come in here, right? That's going to dominate what happens next. It's such a weird flow. I'm not really sure what to do with it here in the treasuries. Can you take, oh yeah, let's see here. I didn't see that. Do you know if I need to purchase the market data through Tradeovate to get the DOM to start working? I was wondering if I need to buy the $3 a month top of, or the 13. You need the market depth data. Yeah. So for the DOM to work properly, you need the market depth data, which is essentially $15 a month. If you get I get the CME bundle, and I think it ends up being like 30. I'm not sure if this is a liquidity hole or if they're pushing higher. Well, kind of what I'm seeing happen is not necessarily what I would call a liquidity hole, which is to say, I'm not seeing a bunch of volume being executed in one spot and the market makers just not putting up a lot and it going back and forth. What I'm seeing instead is the market makers adjusting their bids and offers based on correlated assets and causing a very slippery market. So that's a kind of a market that I really don't like, right? Because that is, there isn't a large meta order in the treasuries, at least. There's not a large meta order for us to latch onto in the treasuries. The market makers are in charge and the correlations are in charge. And that makes it very difficult for me to predict what's going to happen. Curious. So the dollar got dragged lower there. Now that time we saw the Japanese yen just spiked a little bit higher and the treasuries did not go with it. I'm just hearing some numbers about PEPP purchases. That might be a factor here as well. I don't know. So this is really, really interesting because the treasuries have moved down now, and this appears to be completely on its own. Did you make more money from trading? I would probably have to say, well, it's probably close. So it depends on which trading you count in, right? Like if you count futures trading, the amount of money that I mean, like overall, like all futures trading ever is probably a net loss, right? It's only the past year or two where it's been like break even, slight profit, right? And most of the profit goes to paying for costs, so no one really consider that making money. When I include like cryptocurrencies and stocks, I've made a couple $1,000s from that. So I would definitely say that is larger. But it's also like, okay, if you just count indicators, that's only, I don't know how many people. I'd have to go and look it up, and I don't want to pull that screen up because there's sensitive information on it. You don't need to see every customer's email address, right? But I think that's probably close. But the one that has made money, to be honest with you, is affiliate sales from Jigsaw. Oh man, the affiliate sales from Jigsaw can add up to be a lot. And I would say that the affiliate sales from Jigsaw is probably a bit more than like the overall trading, right? But I don't know if that's really a fair. I think the reason people would be interested in that question is because people will always say, "Oh well, don't pay attention to anything that these people say on YouTube, because really they're just trying to make money off of you from all of these other things, and they don't actually make their money from the trading, right?" Well, I think the only reason why that's really true for me is because I just don't trade very big, right? I'm not taking super big risks with the futures trading. So it's not really a very good comparison for me. But then the other side of that is that I would say generally they're right. There's this whole thing like you should be very suspicious of anything that you hear people on YouTube or anywhere else say. But my counter to that is that I am not saying, I'm the greatest trader and the reason that you should watch my channel is because of how much money I've made in the past and you can emulate me, sort of a thing. The reason that this channel brings value is because I'm sharing real, provable, empirical evidence with you about markets that you don't get anywhere else, right? And that's information that is valuable. So, that's why I would go back to that. Right? How you make money from it and how much you can make from if you are successful with it is entirely up to you, because I'm not even giving you a strategy. I'm just giving you all the information. It's up to you to put the pieces together and find your own way, right? But at least you know that the information that I'm giving you is backed by empirical evidence, which almost nobody else in the trading space can say. Do you know people making money from futures trading? So, yes and no. I mean, the problem is that just because somebody's made money this year doesn't mean that they're going to make money next year, right? So, I've definitely had people show me results from futures trading that were quite impressive. But whether they're still hitting those numbers, I don't know. It's a particularly difficult thing right now because in 2021, it seemed like everybody was making money. And now in the past year, it seems like nobody is making money, right? What use the pen for? What, this pen? To draw on the screen. Yeah, Matt is a great example of somebody that he's had some success in the past, but then he's had some big failures too. And what'll happen is he'll blow the account and everybody just forgets about it. It's not even his fault. Like that's the thing that I think is so funny about it, is that when he blows an account, he'll make a video about it. He's like totally upfront and honest with everybody about it. But it's just like the YouTube audience memory is so short that people just don't remember it. Yeah. But there has started, at least on Reddit, every time his name comes up on Reddit, there's tons of people saying, oh, he's a terrible trader. So yeah, I can draw on here now. Make beautiful circles. Okay, we are reverting a little bit of that downside action too. See, so I can try and show you. You'll note that at the low of the day, you'll always have a relatively big order. And then look, it fades away. Yeah. You notice whenever somebody asks you, are you profitable? My response is sometimes, right? But the point of answering in that manner is to point out that profitable is very dependent on the time frame on which you look at. And that you were profitable in the past does not necessarily mean that you will be profitable in the future. And profitable on a 1-year time frame doesn't necessarily mean that you were profitable on a 5-year time frame, and so on and so forth. So trying to look at somebody else's performance as a measure of, like, should I listen to them? Should I try their trading style? Something like that. It's not a very effective measure. Paul on chat says, talking about people being profitable one day and lose it all the next. I just learned about the history of option sellers. The one who made the apology video, if you know, I'm not sure I know what you're talking about, to be honest. Yeah, he makes a video of blowing the account and then makes money from the video and buys a new account from that money. Oh, totally. Is he sponsored? I don't think he's like quote unquote sponsored, but he does do affiliate links with them, right? I could do funded trader program affiliate links too if we wanted. I'm pretty confident that if I just sent them an email and said, can I get an affiliate link, they would send it over. But we made the decision a long time ago that there was some problems with the way that the prop funds worked, and that we didn't want to be, to have that incentive to drive people over to it. And so we were not going to do affiliate links. My loss, I suppose, but... But no, James, you say, I think he means consistently profitable, taking money out of the market every day with a little loss. So if I go into the market in 1 year and every day I make money, a little bit of money, except for the last trading day of the year, and then I blow all of my profits, what does that mean? Do I still get to call myself a profitable trader? I'm a profitable trader and I just had a setback? Or did I just waste a whole year? See, my approach to that is you just wasted a whole year, right? Because essentially what happened was you had a strategy and then a fat tail event came along and it completely destroyed you. So no, the strategy is not actually profitable. Maybe there's an adjustment you can make so that that never happens again, and then you're profitable every day and that would be fine. But my experience has been that that's not what happens. That actually what people are doing is they're taking on a lot of risk so that they win most of the time. And then when they do lose, they lose big and they lose everything. And that's what, I think happens to Matt. Matt would probably say, I was making bad trades. It was like, I had a discipline problem or something like that. But I would argue that it's inherent in the strategy that he's using. That there's not actually a real market edge in what he's doing. That it's just the nature of risk and fat tails. And when that's the only thing that is bringing your profits, then when fat tail comes, you're probably going to get destroyed. If you watch them one time, then you'll start to get a bunch of other videos from them, right? But like this is another thing is I probably lose people because I say this. But you know what? It's okay because they're better for it, right? The futures trading does not make a very good career. Okay, retail futures trading does not make a very good career. If you want to have a career in trading, then go to college, do really good in a financial or quant program or something like that, and then go and get a job at a big bank or a hedge fund or something like that and execute trades for them. And you'll make more money and you'll have the resources to really trade effectively for real. Retail trading, you really have to think of it as a hobby. Like you can make money. All hobbies can potentially make money, right? But you're not doing it for the money, are you? Right? Like if I did woodworking, I do woodworking. I'm not sure if I call that like my hobby yet, but it's kind of starting to turn into that. We'll see what happens after we finish this desk. So it's a hobby. Could I make money from it and make furniture and sell it? Yes, I could. But is that why I'm doing it? No, I'm doing it because I enjoy the craft. Right? And that's how you have to think about it. And then you can go, once you're thinking about it from that perspective, then you can go like, hey, you know what? It's totally okay if I'm trading super small size. And yeah, I'm making money, but not a whole lot. It's teeny tiny amounts and everybody wants to go big, but you're trading tiny amounts. But it's okay because that's not where my income's coming from. It's coming from something else. And then once you start taking it from that mentality, then that gives you the base to trade long enough and get the experience enough that at some point in the future, you can trade big and then you can make money. Because the thing is in futures trading, especially if you start doing things like pyramiding, you know, if you catch a really good swing trade and you're pyramiding with it, sky's the limit, man. And you could have been like a losing trader. So it works the other way too. You come in and you make money every day of the trading year except for the very last day, and then you blow the account. What have you done? You've just wasted a year, right? But if you come in every day and for 5 years you're not making money, and then one day you catch this trade, and in this one trade you make like $50,000, and that $50,000 will just dwarf the $1,000 to $5,000 that you might have lost in the previous 5 years. So are you a profitable trader? Well, like all of the profits came from like one trade, right? It all came from one trade. But you're further ahead than the guy that traded all year and blew it all in one day, aren't you? Get what I'm saying? He should change the name of his channel to Matt Shouldn't Trade. Don't be mean to him. Oh my God, he's a nice guy. Come on. He's trying really hard. That's so funny because I keep going from subject to subject. You know, this is kind of my ADHD mind. Can you see how, like, the way that I kind of function is you'll say something and then I'll see all of the connections and I'll relate the connections to you. Some people like that, some people don't. But hey, the thing about Matt is I like him, and I'm still sitting here waiting for him to go, you know what? Price action doesn't actually work. Like, I'm waiting for Matt to come and watch my channel and see my video about, you know, the smart money concepts and price action and technical analysis in general and go, oh, he's right. None of this stuff actually works. And the only reason why I thought it was working before was because I was taking excessive risk. So I should completely shift my mentality and instead try to predict flows and use the informational inefficiencies that may be working to my advantage to predict flows, and then see how he trades after that. You know, I'm still waiting for that one. I'm hoping it could happen, because it seems like he has some things that are good attributes in a trader and so forth, right? So he could totally has the opportunity to do it if he could just, you know, let go of price action. Yes, and lose all of his followers. Maybe. I think it's definitely true that he probably wouldn't have as many followers if he wasn't trading price action, quote unquote. But I think that now that he's developed a large enough following that, you know, if he switched over, that, you know, it wouldn't change a whole lot for him. from the perspective of his followers and how successful his channel is. So like, well, there they are at the low again. Are they going to hit 26.5? Somebody hit it, but it got yanked away from them again. We are starting to get to the point where I'm seeing enough of a decline in cumulative delta that I can start to think about, is there a meta order short and is it going to continue through? I don't feel very confident about it yet though. So one of the things that's on my mind right now is I do kind of think that the interest rate is starting to get too low. And I think that there's kind of this tightening, loosening sort of thing where it's like, the federal, interest rates are getting really high. And so the Federal Reserve doesn't have to be hawkish. So then interest rates decline, and then they decline too much. And then it's like, monetary conditions are too easy and the Fed gets hawkish again. And it kind of goes in this oscillation back and forth. And I'm concerned that we might be at kind of towards the bottom of that. And that, the treasuries might start selling again. And you are selling today. And so I'm wondering if that's what we're getting, that or not. So I'm just going to note it for now. He's actually a smart man when it comes to building an audience and generating. Oh, let's see. I don't think that he comes in every day and says, how can I build my YouTube channel and yada, yada, yada. I think that he cares more about the trading. And if he had to do something to grow as a trader that, his YouTube channel wouldn't necessarily like, I think he would do it. But I don't really know him that well, and I'm probably projecting there. But the other side of that is that I think that there's actually a better I'm reaching for words today again. I don't know why. I think that you actually have a better setup to make YouTube content with the way that we trade. Because there's a better story with the way that we trade, right? It's the story that keeps everybody enthralled in financial markets for the last hundreds of years. It's an evolving story every day about what's going on in the economy and so forth. And we're trading it, and we're talking about it, and we're looking at it directly. And there is a story that you can make from it. I don't know if I am very good at narrating that story for you guys, because a lot of the time when I'm talking about things, I'm like, and it's really disjointed, or I kind of know that you understand a certain amount of context because of because it's more of a conversation. And so when you try and turn it into a YouTube video, it's like, there's this key piece that's missing, right? But if it's all about story, you can make great story with that and turn that into a YouTube video. I just don't have the time to do that right now. No one aside from, no, I don't think that that's true. I think that everybody that goes and visits the CNBC front page are involved in that story, and that's not just professionals. And that's enough people to make a pretty sizable cable TV audience. And I think that it's enough to make a pretty sizable YouTube audience. Or just as an example, Graham Stephan, right? He just talks about things that are going on in the economy from like a very, very general point of view. But it does very, very well. You know, Matt probably makes enough from his YouTube channel to live off of it and to fund excessive trading. But Graham Stephan is, you know, makes millions of dollars from his YouTube channel. Graham Stephan? Graham Stephan is basically the largest YouTube influencer in the financial space. Well, we're back to the open. The Japanese yen is spiking higher again. So I think that this little push up is being backed by the yen, but look at the dollar continuing to sell. Man, if there was a trade here, it was short the dollar. But in the treasuries, it's not resulting in a whole lot for us, is it? Yeah, the real estate clown, that's right. That's exactly what we're talking about. If Seth does good videos like this, he'll grow slowly because he teaches good information. But it's not that visually appealing. Could be. You know what the thing is I've kind of come to, there's a bunch of different things and who knows what it could do. I don't think that current Seth knows what it is that would bring the YouTube channel to success. Maybe you don't have to do anything, but I've just kind of decided I'm just going to do what I feel like. and if YouTube likes it, great. And if they don't, who cares? That's basically where I've come to. I think a large part of that is because I really come past need. Like, it used to be, I was pretty comfortable, but, you know, I had a huge list of things that it was like, oh, you know what, someday I'd really like to do this, and I'd really like to do this. But more recently, it's turned into like, well, any one of those things on that list, I could go and get right now. But I don't, because then what would I have to look forward to, right? And so it's more like I'm pacing myself, but there's not like this need, and there's not like this, we need the YouTube channel to be more successful so we can do X, Y, and Z. We just built this new computer so that we can do like more quant work on it. We'll see if I'm able to, like, you know, get rid of that computer. Sorry, basically wipe it, right? So if I don't go onto that computer to grab any information or files for like a few days, then maybe I'm good and I can erase it. One of the things is I haven't done all of the music production stuff over on this computer yet, so that's a pretty big thing holding me back yet. But anyways, that's what we spent some of the money that we've made from the stream, right? So if you think of it as like, okay, when you look at the affiliate income and the YouTube and the selling the trading indicators, and you take all of that together, right? How much of it has resulted in personal income? Zero. Because it all goes back into reinvesting in the stream, right? All goes back into reinvesting in the stream. And now what do we have next? Like, what would be the next thing that we get after that? I don't know. I guess I need to buy DaVinci Resolve, you know, the pro version of DaVinci Resolve. I don't absolutely need it, but it would be useful. Maybe another light. You know, like we're kind of getting to the point where like I've made all of the investments into the stream that we can. Right? So there isn't this drive to be like, oh, we need more of this, we need more of that. It's just It's just do what I feel like and be better at trading, you know? What I saw the difference between you and other traders is your videos trying to teach others well. Most videos are like how much they made. Yeah, it is true. I mean, the YouTube algorithm is very much dominated by clickbait, essentially. Like how many people click the thumbnail and then how much of that video they watch when they click the thumbnail. So if you come in and you say, oh, I've made so much money from trading, yada, 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 like people click that. People click that a lot. And I refuse to do that. So I wouldn't say I'm the only person that teaches stuff, right? But the thing is you go to these other YouTube channels and they'll teach stuff. And what are they teaching? They're teaching like general high-level platitudes. The trend is your friend until it ends, and, you know, manage risk and things like that. They're like really general, not very specific advice, not really provable advice. Whereas what am I talking about? Stylized behavior of markets, empirical studies, things that we know we can prove about the markets, stuff beyond what the average person understands. You can actually be successful at business or talk about how to be successful at business without being successful at business, and through that become yeah. I really think it's a function of my ADHD. I know it comes up so often, like I probably talk about it too much, but it really is a function of my ADHD. A neurotypical person really values social learning, looking at other people and copying what they're doing. And there are a certain group of people in particular that are very sensitive to wealth signaling, right? That if they make the money, they want to buy all of the rich things and then go and post them on social media and show everybody the cool new car that they got, or yada yada yada, right? Whereas for me, it's like, yeah, okay, I bought a new van. That's actually an expensive car. I know it's not flashy, but they aren't cheap. I could flash that around. Nobody cares, and I don't care. What do I care about? Empirical evidence. So I'm going to show you the empirical evidence. And why am I going to focus on that? Because I want to collaborate with other people that are focused on empirical evidence. I don't want to collaborate with people that are showing off their Ferrari all the time, or taking excessive risks and blowing their accounts all the time. You know, I want to work with people that look at empirical evidence and understand what's going on in the market at that time. And so that's what I talk about, and that's the audience that we get. And I guess it's smaller, but ultimately that's better for us in our trading. Come back every day to hear the hard truth from Seth. You're just somebody that's a PhD holder in economics, and his videos are like a PowerPoint slideshow. Oh, I haven't heard. You have to send me that one. Top trim Honda. Yep. No, it's not a Honda. It's a Toyota Sienna. Dude, that was when I learned. By the way, I mean this is kind of a wild, but like people don't even know. Like, you think, okay, somebody's gonna go and buy an expensive car. What kind of car are they gonna buy that's expensive? And you think about it, and you're like, oh, it's gonna be like a cool sports car, like a Ferrari or whatever, right? But you know that like Ferrari makes like SUVs and stuff now. Like I don't really know what they're called or what the deal is, but apparently they have Ferraris that aren't sports cars, right? And there's like this whole area of like Land Rover type vehicles. So like the G-Wagon from Mercedes-Benz, is that what it is? Those are crazy expensive, man. Those are crazy expensive. Right? Okay. Well, maybe we're not talking about the most expensive cars, but we're just talking like somebody's to do when they want to buy a nice car. Okay, what kind of car do they buy? Do they buy a Corvette? Do they buy a Cadillac Escalade? Well, they may actually just buy a Toyota. And it's just the trim that they get, right? You get the Toyota, but you get the top level trim, and now all of a sudden you have a car that was like $20,000 and it's $40,000 or $50,000, right? The 3 richest hedge fund managers partners I know drive that. What, a top trim Honda Odyssey? I do prefer the Toyota to the Hondas, but I don't know. There's some. It's kind of a weird thing. There's something that feels a little bit more like nimble and raw about a Honda compared to a Toyota. Toyota feels very almost sanitized, I guess you could say. You know? But anyways, so I think that one of the things I see out there, though, is that there's this assumption on the internet that like everybody's poor. Because basically what happens is the people that have the most time to spend on the internet and on social media are younger. And so they're either teenagers or people in their early 20s that they just don't have a whole lot of cash. That's why they're on the internet, right? The people that have a lot of cash to spend, the more that you do that, the less time you spend on the internet. I probably spend more time responding to people and doing stuff on the internet and arguing with people on Reddit than the average person of my income bracket would, because I just can't seem to help it. But I don't do that nearly as much as I used to because I'm watching the kids most of the time, you know? Okay, so you get like a certain demographic that's producing most of the social media content, and they're all poor, and so and that's all that you see is poor, and so that's like, oh, everybody's poor, everybody's struggling, right? But the reality is there is actually a section of the United States right now that is doing really quite well. They're doing quite well, and they're spending it, and we can see it in all of the stats. It's like a K-shaped recovery. There's this one section of people that are just going nowhere, and then there's this smaller subgroup of people that are making all of the money, and they're making up for everybody else in terms of like, you know, consumer spending and so forth, right? And the average person just doesn't see it because these people aren't flaunting it. And when they do buy things that are really nice and expensive, they're things that the average person doesn't even recognize as nice and expensive. It's just going to be like a plain shirt. And that shirt is like $1,000, but you would never know it because it just looks like a t-shirt, right? Or it's a car. It's 2 or 3 times more expensive than what you think it is. You see, oh, they're just in a Corolla. They're just in a Corolla. That's only like a $20,000 car, but then it's a GR Corolla. So like, those aren't crazy expensive, but they're a lot more expensive than the basics Corolla, right? Or you think that it's just it's a Toyota, but it's the Avalon or whatever the new one they call it. It's a Crown or something like that, right? Those are pretty expensive cars. Probably more than I would normally be willing to spend on a car. My favorite car is cheap to buy, cheap to run, and reliable to get me from point A to point B. Yeah, or you know, let's see the other one. I can't believe that I even forgot that about bringing up this topic. But you know what rich people are really buying right now, right? Is like Toyota Tundras. Get a top trim Toyota Tundra, and you're talking about like $100,000 car, I think. They're getting pretty crazy. Oops. You wouldn't buy anything from the Volkswagen stable ever? Okay, so tell me this. If you were going to get a hot hatchback today, what would you get? Because a Volkswagen R is not a bad choice on that one. Yeah, includes a lamp of this. See, King says a GTI, and the R is basically like the nicer version of the GTI. I'm not asking. I don't know. You wouldn't. I'm just asking if you were forced to, which one would you get? I don't know why, but I want a hot hatch. That's why I'm asking. My brother drives the car. Well, my car is probably about 15 years old. It's not quite 15 years old. I think that my car is 2009. Oh, yeah. The way you were talking made me think that you knew more about cars than you do, I guess. So I remember a couple of, like sometime last week, we were talking about the GR Corolla, right? Like that was when I found out that what the GR Corolla was and everything, right? And then I looked at it a little bit more and I'm like, well, apparently they're kind of hard to, like, the dealerships don't really have them, and so the prices that you're paying on them are kind of stupid and this and that. And the sound system in it isn't very good. But now the more that I think about it, the more I'm like, no, a supercharged 2-cylinder engine is definitely what I want. And I can just put my own sound system in it. You need a motor? Yeah, probably. Yeah, you know what though? I'm kind of scared to drive a motorcycle. So I always wanted a Ducati, man. That was like, become a famous DJ, have a villa in Ibiza and a Ducati motorcycle. And I could totally buy a Ducati. Yeah, totally could. But I had a cousin, like second cousin, and he was into that stuff, man. That was like his whole life was his Ducati motorcycle, and he died. He died riding it. So driving a motorcycle is, like, that is kind of a little scary to me. I don't know if I would really, be willing to go fast enough and all of those things to really get the enjoyment out of a motorcycle. I would buy an old Mini Cooper and put it in a large... Oh man, that was the kind of answer that I was looking for, man. Yeah, that's what I was talking about. The Golf R. It's on the list. Like the list is Toyota GR, a Volkswagen R, a Subaru WRX STI, and that's basically it. But they don't make the STI version anymore, so it would be an older STI. I suppose I could still do that. I think that there are some problems with Subaru, so there are some big downsides to those. That's why it's like, oh, let's just get the Toyota GR. I also kind of like the thing about, like, look, a Corolla GR is like the ultimate rice burner. Is really what it is, right? Like, if they were to make another Fast and Furious movie in 2025, I think that there would be a Toyota GR in it. They could do a Supra. A Supra would be dope. If I was gonna go, I tell you what, man. If I was gonna go that route, though, you know what I think is a cool looking car, man, is that new GTR. Oh, Let's pull up an image of that. That is just a sweet. ...2004 Nissan GTR. Versus the Supra. Oh, come on. I know they have one. Toyota. And then don't they have here on vehicles, cars? There we go. I don't know what a GR86 is. The Supra. Okay, so there's the Supra. They're kind of going a little bit more with the rounded look, which is kind of a little bit more like the 90s one, right? The GTR, man. Well, it is a much more expensive car, isn't it? These start at 45,000, whereas the GTR starts at 120. So a GTR is kind of getting into supercar territory. But, oh man, it's so pretty. I just think that is just like, that's a serious, this car means serious business is what I think of. Knockoff Miata with the GR Supra, that's funny. It's a lot like the 90s one. You know what's like my ultimate for like the look of a car though? Is like a 1980s Mazda RX-7. Like one of these. Right. Sports car hatchback. Like this one. I love that. One of these I bet you we could find cheap, yeah. Let's go see. Let's go see. I don't know if you would want to buy a car like that anymore, because it would be hard to keep them running. No, I want cars. RX-7. What? Okay, wait, let's go back. Makes Mazda. Might be hard to find one. RX-7. Search. Oh, they have some. Oh, there's a 95 one. I don't know if that one really fits. There's the 87. There we go, right there. Love it. You just need to get the little slats in the back. I love them. We have a similar taste in cars. I call them the UFOs RX-7s. I don't know if I could justify $15,000 for a car made in 1990, though. Are you crazy? Are you crazy? The car is a GXL with a Turbo 2 engine swap. Holy shit. well, that explains that. I wanted a turbo car, so I bought a turbo engine, rebuilt it, and got it back on the road. All the work besides tuning was done by me. This car is far from perfect, but it's still very nice. The paint, interior, and undercarriage are all in great condition. The sunroof, automatic seatbelts, power windows, power mirrors, power steering, pop-up headlights, and hatch. Dampers all still work. Radio works intermittently. Oh, cool. Well, I'm going to replace that anyways. The auto-adjusting suspension has been removed due to the shocks leaking. Oh. Most of the AC system has been removed to accommodate the front mount intercooler and other mods. Oh, well, that's a big problem. That's a big problem, unfortunately. I would need to be much more into cars to buy this car. He's telling you what's in it. He's basically saying like I'm I'm a tuner. You would need to be a tuner to buy this car. But bravo, sir, whoever you are out there. That was a really nice looking RX-7. Oh, wow. Look at the cooler on the hood. That's so cool. That's pretty cool. By the way, in the treasuries, I'm noticing liquidity hole right there at the top, right? So it seems like we've stopped getting like pushed around here. I don't know which correlate, because it was kind of like it was following correlations and then it wasn't. Gold is looking really strong today, by the way. Wankel engine is a rotary design. Most RX-7s are swap. Well, my understanding is that the rotary engine was really great, but wouldn't last from 1990. So then what do you do when you need to rebuild it? You're not going to go back to the rotary. Yeah. You know about this 350Z body swap with a Tesla? No, what? Well, that's interesting. America's vehicle import laws. What are you saying here? Must be 25 years old to be legally brought into this country, which means more cool RX-7 and Super etc. of the better known body styles should be coming soon. That was a strong uptick. That was a really strong uptick across the whole curve there, out of seemingly nowhere, shoving it out of a very clearly defined range. So that would almost seem to match up with like news, except for that I'm not hearing any news, but we are anticipating getting some news here in 10 minutes. So what's the, oh, we were just talking about cars for whatever reason. We got from talking about trading influencers to talking about what kind of a car you get as a trading influencer, and then we started talking about it. So that's one is if I was going to buy a hot car for the, you know, like Graham Stephan, when he got it, he got the Tesla because he loved the Teslas, and then I think he got a Ford GT. That's what I think he has in his background right now, right? But I would get that Skyline GTR. I think that car just looks so slick. You know, it's like a serious business car, but then sported up. I like it. Well, doesn't look like it's really going for me here. I can probably try and, because that might be them falling back into the hole, but I'm kind of anticipating that I will get some continuation. It's just that I don't think it's going to happen before the news, so maybe I need to bail on this. The Winko rotary can be great, but it's more of a hobby type. Essentially, only people who care know about them could keep them alive. Normal people wanting normal cars who blew them all up. Hey, Seth, do you know how I get the DOM to show all levels of MES instead of just whole numbers? It by default, it should be doing that. I had to make it just only show whole numbers. I'm using the tick aggregation. So when you set the thing up here, right, I'm doing symbol. It says cross instrument found MES. So I'm using that. And then the tick multiplier is 4. So if you set your tick multiplier to 1, then you should get every quarter. Isn't Mazda about to come out with a new rotary engine? Yeah, they did, but I don't see which car it's going to be in. Yeah, we definitely have news coming up here. So the consumer confidence, we're expecting a reading of 101 and a previous reading of 102.6. Well, they announced the engine. I'm not seeing what car. Oh, it's going to be a RX-9. I think it's still rumored. Still rumored, so we'll see. I don't know though. The more recent Mazda sports car looks I'm not really into, so. Oh, there was a big stack there for a second. I think they want to, but they're just, from what I'm just seeing here, just from a quick Google search, it sounds like it's like in the works. Like that I would be, like they would be announcing one in the next year. But I could see a rotary engine being really effective for like EV stuff. I don't know if that would mean that they would make it an electric one, or if it's just, I don't know. Okay, well, we got 2 minutes. I don't know if they're going to come back before the news, but like they're right there on the edge. Indeed, high RPM with decent torque, especially for size, makes a really small one, which has power equivalent of a much larger piston engine, and use it to power generator. Yeah. A Komatsu D355. What the heck is that? Oh, Matsu D355. Oh, it's a tractor. Is that like the guy that went on a rampage with his homemade tank or whatever the deal was? Ugh, that's a weird story. Are you allowed to talk about that one on YouTube? I don't know. Yeah, they killed Dozer, yeah. Okay, well, it looks like I'm gonna do the degenerate thing here. Okay, so we did see some liquidity pull. Looking for a reading of 101. It's better than expected. But the treasuries are not reacting to it. In fact, right after the news was posted, somebody put up a big bid there. That's curious. This is actually a really odd flow here. I don't like the way it's going though, so. Yeah, that was. There still appears to be an aggressive buyer here, maybe? I mean, like, he's absorbing it on the bid. Am I missing something? We do have a 7-year note auction today. Mm-hmm. Yeah, 30 years isn't cooperating, really, is it? Well, there was an uptick. See, there's something seems to be just ignoring CB consumer confidence and buying it. Okay, so here's Waller. Look at that. At first I thought maybe they're just deciding that Waller's comments don't matter, but now it's looking like they think that Waller's comments are dovish. They're kind of backing off a little bit when they got there to the highs, so let's give them a little bit. We may be in a good situation because after the CB consumer confidence, because that was a little bit higher than anticipated, it was 102 versus 101. There was some selling, but the buyers absorbed it. And I'm like, why? Well, did they know what Waller and Fed speakers were going to say? I would hope not. So then what was it? Well, there is a 7-year auction today. So if we're in a situation where there's a 7-year auction and we're getting dovish comments from the Federal, or at least being interpreted as dovish from the Federal Reserve, you know, that could lead to some good upside if they break this. But so far, they're not quite able to beat it. We need to give it a little bit of time, but this could be a really good position for me here. Let's just let it play out. At the moment, I'm a little disappointed because it looks like, you know, it's back up there at the highs, but the 30-year is not, and so I'm not getting paid yet. Right? So if anything, I just got a really terrible spot. We're like, oh, yes, we know that Seth is short yields, but so we can't break highs. I know that we need to buy the treasuries, but we can't breach the highs. We just have to sit here at 03 until he gives up. We'll languish here for an hour, and then he'll give up, and then we can move up. Come on. Okay. Not able to build a good bid there yet, but it's looking better. I suspect that our bidder was getting healthy enough selling at 03 half that he's like, okay, let's see if they'll do it at 03, give me more at 03 again. But you can see the action is much more slow at 03. Only 268. I'm seeing some yield curve steepening though. So that might means the 5-year is kind of the pusher. So that steepener is working against me. That's why this is down 5. That last look at the highs was a little disappointing. I don't know if that means it's over, but oh, something's definitely happening in the treasuries here, Jiwi. Whether it results in a new high, I'm unclear. The S&P 500 is a different story for sure. The S&P 500 seems like it's just been going nowhere today, right? Like it's a, what is it? It's a an 8-point range to start out in the E-mini. That's pretty tight. Yeah. I should zoom this in substantially, then you can really tell it. It's like, yeah, it's not doing anything. Well, we got that boost from Waller. They're retracing it now. So either way, this is a C entry, right? There's definitely something going on in the two. Do you see over? Oh, that's oil. I'm sorry. I'm misinterpreting that. There's definitely something going on in oil, though. Oh, they kind of retraced that down movement. That must be what that's about. See, now they've come back to pressure me on the other side, and it's not really on very strong volume either way. You can't have a big move in one without the other. Oh, yeah, you can. I mean, let me put it this way. What we just saw there in the treasuries was significant. Whether there's more more to come remains to be seen. For all I know, we're going to revert all the way back to the bottom of this range. But I'm still favoring the longs because that's the longer term trend the CTAs seem to be covering, and the auctions have been stronger, and I suspect that the 7-year auction will be strong. Is that enough? Well, you had that, and then you had Waller, and it didn't breach a new high. That's a little disappointing. I wouldn't say that the coming back down here cancels everything out, but I'd certainly say it's not very supportive. I'm not getting the long flow that I would want, so. Did see a little bit of selling in the Japanese yen there too, and the dollar moving. So I think that that's what's pushing us. May actually be the treasury pushing the dollar. It may be the other way around in this case, because we definitely saw some volume come in there when Goolsby spoke. I guess it's tough to analyze this market because liquidity has been pretty bad still. Like, yeah, I can see 2000s placed up there, and so at points we get 3000s, but you know, it takes much less than that for them to trade when a trend starts to form. Well, you got it ticked back up one, and now it seems to have just completely paused out. Like I'm not seeing much volume come through at all. Now a little bit of back and forth at 01, so I'll reset it to there. It's like Thanksgiving isn't over yet. Yeah, well. I feel like it's been like this all fall, though, where the liquidity in the treasury has just been not very good. Yeah. Super slow market sucks. Super illiquid market sucks. Well, there was a little bit more aggressive there at 05, but it didn't hold. And in fact, it bids back up and the bids are pretty healthy, so not sure what to make of that. I think we might be seeing the spread reverting here because I'm seeing the 30-year buying and the 5-year selling. And there's another uptick. And they get through the O2 pretty easily, too. See what I mean? I mean, in that case, it was favorable, but still. Like, it's just, it slips through very, very easily. It's going to be very, very interesting if they do make another look at that high there. I can only hope. The moment, though, it looks like after those few ticks up that they're pausing again. Unclear where the flow is coming from. There is Japanese yen is moving up, so it may be more dollar moves than. So one of those things is that like you have two things correlated, so which one is moving the other one, or are they just moving together? Well, the volume is still kind of light in the 10-year, so I kind of suspect that it's more the currencies that's moving it rather than the treasuries moving the currency. Any idea why the markets are still acting super slow? Can't be Thanksgiving holiday, surely? Well, I'm not quite sure I understand what it is about the S&P 500. I mean, there are definitely some institutional flows out here today in the currencies. And I think that the biggest like kind of surprise today was still that OPEC is having trouble coming to an agreement, and they've been stalling their meeting back. When that happened, oil took a quick plunge, but they have since recovered that. And I'm not sure if everything that we're seeing since then is just reverberations of that, or if we're getting new flows in from the CB consumer confidence and reactions to Federal Reserve speakers that we just had. But the thing is, as well, I definitely see something going on in the dollar and in the treasuries. The S&P 500 is incredibly tight, and I'm not sure I understand why that is. I mean, I guess all of those things that I just talked about don't necessarily have to impact the S&P 500, but like usually they do, right? So I don't think that it's like, you know, we're still in holiday sort of behavior. That's not true. It would be like even worse if it was a holiday. But perhaps one thing that is going on is that tomorrow we have GDP, right? So especially for the S&P 500, that's probably going to be a pretty important data point. And so there may be, you know, traders holding back because of that. They're waiting for that tomorrow. Whereas here in the treasuries, because we had a Fed speaker and we have a treasury auction, they can't just sit on their hands. That's one possible theory to explain the flows that we've seen. My only thought was a massive rally a couple of weeks ago on the miss of the 30-year auction, if I'm right. And since then, we've just been moving super sloppy. That's true. That one auction that was bad, like, really damaged the liquidity in the market, especially over here in the treasuries. Like, it seems like since that time that it's just easier for it to move. But I don't know. You can see it right here. It looks like the range is between 09 and 109 even and 03, because they're not able to get it to bid past 02 half. No, I don't agree with that. Sometimes it's better to not try to understand where the market will go, but to try to trade the market. So if you don't understand where the market's going to go, then there's no point in a retail trader trying to trade. You can make money from just the noise, but you have to have a really big bankroll to be like a market maker like that. And you're not going to do that with 1 to 3 contracts. You're just not. You don't have the ability to take on the risk to do that. So if you don't have some idea of which direction it's going to go, you probably shouldn't get in. Now, you notice that for me here, I am holding on to this a lot more than I normally would or should, because basically I have a theory about what the flows are going to be, and they've kind of been not cooperating so much up until just now when they did finally reach a new high. So the whole problem was, one of the things that I see people say is just trade what's in front of you. What's in front of you does not predict what happens next. You need to know what happens next, or why are you trading? I think I know something that tells me what happens next, right? Well, no, but what you're saying, the reason why I'm picking on you, Monaco, is because what you're saying is the common attitude among traders, and it's one of the things that I think holds people back. Right? Like, that attitude is perfect if you believe in technical analysis. If you think that the chart pattern and all of the other things that you're seeing will effectively predict what the future flows will be and tell us that we're going to move up or down, then yeah, you just look at what it's doing and let it come to you. But I say otherwise. I say, let's look for a situation where we think there's going to be an imbalance between the flows that we know and predict those flows, and only take a trade when we know what it's going to do. So far, it looks like what's happening is my estimation of what the flows will be today have been pretty accurate, actually. I'm just not really getting paid very well for it. Okay, Waller's still speaking. I think that he's getting into audience questions now. I hate when people say that trade what you see and not what you think. It's a speculator's game, and unless you have inside information or can completely manipulate a market due to an enormous bankroll, we are all trading what we think. Yeah. Well, I think the intention of it is to say you wait for the signal and you take the trade that the signal says, right? The problem is that if you do like strict signals like that, you're going to find that they're not profitable. So then people are going to say, well, it's kind of more of a fuzzy system. There's discretion involved, right? And so then it turns into, hey, what you think you see and what I think I see are two completely different things. So what's actually the reality, right? You can't actually, it's not actually objective. And the whole point of the statement is to be objective in your trading, and when the reality is that it's not. Yeah, so I hate it. Versus, what do I say? Know what's going to happen. Know what's going to happen, and if you don't know what's going to happen, don't trade. I'm still a big fan of some technical patterns like flags, even though I know which way it breaks or if it's a fake, you can often get increased volume. Often, well... So this kind of comes into, like, I think the thing about technical analysis that's really interesting to me is that there are some real things going on there. Like, we point out certain kinds of patterns and stuff that we seem to latch onto. Is that really all just our imagination? Is it, and it's completely noise? And I don't think that that's the case. What I think it is, though, instead, is that it's not predictive. Okay, so what you're seeing is the result, and the result is significant. So, like, a flag is probably the best example, because if you are seeing somebody coming in with a multi-legged meta order, then what you're going to see is in between the legs of the meta order, you're going to see those flags. So the flag pattern that you get during trends is a direct result of the flows. It's just that you can't look and say, hey, there was a flag here, that means that it's going to go again. It doesn't tell you that. So what you can say, though, is the way that you can utilize that is, instead of saying, when I see a flag, I'm going to take X trade, it's the other way around. It's, if the flow that I think is going to come through happens, I will see a flag. Now that you know what you're expecting, then it kind of helps you judge your trade, essentially, right? Because I know it's going to come up, and then there's going to be an area of absorption where we're going to form a little bit of a liquidity hole, and we might go a little bit further than that and then fall back into that hole, right? So if we extend beyond that and it seems like it gets a little crazy, then I get out, because I know that they're going to sink back into that liquidity hole, right? So there, like, the technical analysis helped me, but not without being able to predict the flows first, right? So it's kind of like I predict flows, then I use the stylized behavior of markets to predict how the market will move based on those flows. I like to just toss coins and go long or short based on that. Well, that's not it. That's, you know, probably just as good as a lot of what people are doing. So I started to see the spread kind of flatten back out again, but that didn't really take. When we started coming back up here, that didn't really take. So I'm not seeing the 5-year lead or anything like that. It's just like they all kind of came up. But the 30-year is certainly still lagging compared to the others. You can see here now, we did make a new high by a tick, and now they're forming another liquidity hole here. So I don't know what that means. It's a little frustrating. What you're getting, the action that you're getting, looks very much like a consolidating triangle, which does tend to move higher, but again, not very predictive. I say that it tends to move higher, but that's just our belief. I don't know if it's actually predictive or not. Probably on the pattern itself, it's probably not predictive. I'm a little concerned by what I see as a couple of strong offers up in here. There's that one. But, you know, it might be a little difficult for us to get past that 04 first. The bids behind us, though, those have been pretty strong. Okay, so Waller just said something that I felt was a little dovish. He said that the data that we've gotten more recently suggests that the growth that we saw in the third quarter was kind of like a one-off jump, meaning that he anticipates that fourth quarter and the beginning of next year is going to be much weaker economic growth, which would support, you know, lower interest rates. But I guess that's kind of more of a reflection of like the Federal Reserve does believe what they're doing is working. I don't know if that's actually like a good prediction. That's what you would expect him to predict based on the policy, right? What's the playlist in the background? This is Stream Beats by Harris Heller on Spotify. Harris Heller has his own YouTube channel called Senpai Gaming or something like that. Anyways, he made a playlist that had royalty-free music in it, and he became a millionaire off of it, and I'm really happy for him. And I love the playlist, and yeah, I people ask what it is all the time. I really like it. He has like a bunch of playlists, but I settled in on this hype one. I think that the hype playlist is really the best kind of for us. And got some good kind of soft 808s in there, and the little hit hat patterns. Yeah, it's good stuff. Let's see here. John Grady made a post here a few minutes ago. What does he say? I think it looks like he's talking about exactly what we are. Everybody is waiting for someone else to push the highs or lows in the stock indexes this morning. Nobody wants to pay the rest of us. Bit of a grind in this low volatility the last 2 days. Oh, you know what? I really should have thought about that at first, but let's talk about that. People have been selling volatility with a vengeance lately, and so it's probably that may be why the equities are more range bound than the treasuries. Is it possible to hear you but mute the music? Not really. Talking about that just made Jiwi think, hey, you know what? I would rather listen to something else. I'll just... We used to have it as just my voice so that you could do that, but then we found that people actually preferred the music after. I had to do it long enough, but people liked the music. So there are like ways to do this. So I actually send it as 2 audio streams. So because in my recordings, I don't want the music. So it can be taken out. But like the way that YouTube does things, you can't do that. You as the audience can't do that. But maybe, it's technically feasible in the future that you might be able to. I suppose. So the treasuries are kind of turning more into like just a very gentle uptrend, similar to what we had yesterday. So because I have a little bit baked in here, I think I can hold it, but I'm really concerned that it's not going to bust here in the next 30 minutes and I'm not going to get paid today. You're a metalhead? Yeah, I use OBS for the streaming. Google, in February of 2024, we will update personalized ads policy to introduce new limitations on personalized ads for consumer financial products and services. Google will begin enforcing updated personalized ads on February 28th, and it will take about 6 weeks to ramp up to full enforcement. Oh, really? So does that mean that you will no longer get advertisements about financial products? So I guess that's probably bad for my YouTube channel, isn't it? If you can't get, I may not be understanding what they're saying, but it sounds to me like, if I want to advertise for futures trading, for instance, that I can't really do it anymore. Not personalized ads. Like to say, oh, I want to see all of the futures traders out there and just advertise to just them because it's a financial product. They're going to say, you can't do that. But you know what? I ultimately would support it. I think I would have to say that I'd ultimately support it. Because I feel like that there's a lot of nonsense that gets advertised out there, and it's not a very positive thing for people. See if I can get like a more official channel to see if I can understand what they're saying correctly. Yeah, I don't see it. It came back down 2 ticks. Still kind of seems like there's like a liquidity hole here. If that's saying what I think it is, I think you'll see stuff on like Okay, now that stepped back up there very quickly. That's gonna go. Okay. Okay, so now Waller just said it is conceivable that we could lower the policy rate because of what we're seeing. So they definitely like that. The S&P 500 jumped as well there and broke to a new high. So this could be something. In the S&P 500, I think that they're probably, it's going to let it go and then they're going to try and clamp back down on the volatility. But that is enough of a thing. And I don't really think that he's saying anything too surprising here. But the robots pick up on that stuff, right? That could definitely be something that wakes them up and shoves them out of this range. Okay. Oh, I thought I had myself muted there. Yeah, sorry you had to hear that. I'm sorry. Okay, so something that we just saw there was that there was a liquidity hole starting to form at 07.5, 08, but it was way too early within the volume in the meta order. So when that happens, often what will happen is there is another push further, and then when that push further dies out, it will settle back into the liquidity hole. So that's almost exactly what you just saw right there, was that extension. I don't think I actually wanted to take my profits on that, but it was right there at plus 20. I had the order there for a long time, so I think I will take it. I'm just kind of putting that addendum on in case anybody says, "Oh, Seth thinks that it's over," and then it keeps plowing through. That was a little bit more of me not canceling my order fast enough. Because it was like, okay, there's a liquidity hole, there might be a little jump, but then when I saw that flow came in, it was so aggressive that I said, oh, there could probably be even more than this. So I might be looking at, so I took it off at what, 3.6? Did I already close my window? Why did I do that? Why do I do that sometimes? It just drives me crazy. Okay, this right here, positions. $20. So yeah, it was at 380. So it may be possible that we get 4-3-5. They are coming back here though. So For the time being, it's looking like a pretty good exit. So let's put the title of today's video. Markets breach volatility after Fed comments. Fed speech. Rolled ZN to H24. Oh, you've been long this whole time, haven't you? I forgot about that. So there's 436 again. So this is kind of still like, I could maybe hold it. I don't like the way that it's kind of acting here. So I think that under normal circumstances, I would probably be getting out now. And part of the normal circumstances would be that there's only 15 minutes left. Yeah, at the very least, we're done running stops. I think so. It's kind of curious to me, though. Like, we had about 10,000 contracts come through. It didn't move that much, did it? So volatility, it appears, is low. And it is a little frustrating to me how much it went against me at the first. Like, this is just going to be such an interesting trade to look back on. So what happened was I got in about right here. I got in about right here and I got out there. So the entry wasn't very good, right? But what I find curious is that from here to here, I lost more than from here to here because of the spread, because of the way that the spread is moving. When we got the winner, it didn't help me as much. So if I had taken this trade in the 2-year, I would have done a lot better. I probably would have made $30 or $40 if I had done it in the 2-year instead of the 10-year. And that's because of this change in this. Well, it wasn't right here. It was this right here. So this change in the spreads kind of worked against me somewhat. And then same here, when this moved, it was like everything was moving up, but the 2-year moved more. So it would have been better to have been in the 2-year, right? But just a very interesting trade, because all through all of this, it was kind of like, you know what? I don't know if the flows are very supportive. Look at the cumulative delta here and everything. Is it very supportive of my trade? It's not. It wasn't until this comment that it really pushed things my way. So should I be patting myself on the back? I don't know if I really should, to be honest with you, because I thought that it was going to be more about when Waller's speech started, it seemed like it was somewhat dovish. Market was buying in spite of CB consumer confidence being a sell. But then I'm also thinking about the auction, right? So I had my ideas about flows, and Waller was kind of like a risk that I had seen as it looks like it's turning dovish, so I can keep the trade on, right? But in the end, he ended up saying something really dovish, or at least that the market interprets as dovish, that really, really pushed us to new highs. So luck, I guess. But I think this could be one of those cases where you could say that we made our own luck. Yeah. Either way, I'm really happy with the trade. So, you know, because I could have very easily have given up on that. I had a lot of things telling me to give up on it. Tight volatility gives breaks. Tight volatility breaks after dovish Fed speaker. Yeah. Okay, so it is settling, and it is right where we identified that liquidity hole too. Isn't that funny? I'm telling you, man, it happens so often. So just watch for it. It'll be like this. It'll be like this, and then it'll come right back to that spot. But you won't necessarily see that in the chart, but you'll definitely see it in the order flow where there's going to be a node here, and they're going to trade a little bit back and forth there, and then it pushes higher and then comes right back to it. Good stuff. See, so can I go back to something we were talking about earlier when I was saying I feel like that this is a better story? Right? So I could go back and I could make a video here and I could show me doing all of that stuff, right? Came in, okay, I think that the flows are going to be long. It looks like we've got an auction. I expect the auction to be good today. Oh my gosh, where's this fly coming? I'm expecting the flows to be long today. I saw something in the flows that kind of indicated that there was some aggressive buyers out there, so I decided to get in. But then that wasn't a very good entry. I wasn't happy with it, but I stuck with it, and then eventually it turned out for me because of the Fed speaker. That was a good story. I thought that was entertaining. For me, it was entertaining for me. Maybe because I made $20. I don't know. But you know, I feel like if you edited that into a video, you could make a good video out of that. I just don't have the time. Now, I just want to warn, by the way, even though it looks like we've kind of done running, I like the way that TLA Trader said it. It looks like we're done running stops. I think that a lot of that was like market makers and people that were short just totally bailing there, right? But that doesn't mean that it's over. It just means we're probably in a liquidity hole. I think we stay here for another 45 minutes. When the liquidity recovers, you could see buying come back in because I still think that the auction is positive. In fact, if it weren't for me having a day job, I think that I would stay in this trade and try and hold it until after the auction. I don't want to sit and babysit it during that time and go through all of the stress because who knows how it could come way back in that time, you know, but I think that the auction's going to be good. So think about it. It was entertaining for you. So does that mean if it was entertaining for me, it probably won't be entertaining for most other people? Maybe. Practice my handwriting here. Do you think I should do my J's like this, or should I put the thing on the top? J. I kind of like to do the serifs. I don't do it like that. Need to be more clean with my U's so that you can really see that thing to differentiate it from the V. Learn cursive. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, Z is like this. What on that? I'm like super interested in calligraphy, but I don't think I could ever actually do that. How these people get this incredibly fine motor control and all that, it's crazy to me. Now you're entering the entertainment realm. How should my J look like? All you need is some makeup and a new pronoun. Well, so the way that you do it is when there's a downstroke, you get bigger, and then when you come off, it comes off like that. That's probably too exaggerated. Maybe a calligraphy J would just be better like that. So moving around a little bit here, so we got something else coming. So let's just come back here a little bit. So I'm seeing Nick Timmeros, he's quoting Waller's, if inflation goes down, you would lower the policy rate. There's no reason to say you would keep it really high if inflation's back to target, for example. Okay. If you see this lower inflation continuing for several more months, I don't know how long that might be. 3 months, 4 months, 5 months? You could then start lowering the policy rate because inflation is lower. Yes. I see risk to inflation from higher services consumption as the Bowman speaking. I did not see anything. I do think LaGuardia's going to be speaking here. They did just bust out to a new high out of nowhere. So I'm not quite sure what's with that one. That really kind of looked like something that was like another news event, but I don't think it actually was. So maybe it was just somebody in the treasuries, and I'm not sure which part of the curve. It could have been the 10-year, but maybe it's in the 2-year. Somebody just puking there. If that is the case, it could very easily fall back into that range. If that's all, if we don't see volume continuing to push, really good chance that they fall back to this. But let's see. This is totally a situation where those flows could just continue, especially if people's stops are getting hit, right? But this is how a J, so let's see here. What do you got? I can't draw a J like that. Are you kidding me? Oh my gosh. Brush calligraphy J. "15 ways to write the letter J in brush calligraphy." Jeez. Okay, so they're saying to do something like, let's do one like, I think maybe more like this. So they're saying, oops, that's not what we want. Oh, and you know what else we should also, I made sure that the trade was on the live account today, so that's a big plus too, because we had at least 2 trades lately where we screwed that up. So I was saying like that. There you go. That's a pretty good. That's a decent. I need to figure out the the pressure sensitivity bit, because that's like way too exaggerated. Here, I need to turn off the timer thing. New timer. There's a J of sorts. Doesn't really look like a J, does it? Or I could do it like this way. There you go. The whole pressure sensitivity thing is super interesting to me too. I don't think I could ever really get good at calligraphy, but I wish. I wish. Maybe I'll try. Maybe I'll try. I feel like right now with the way that I'm holding the pen that I'm doing pretty good. I think in calligraphy you want to be more like this though, like you're moving your whole arm. I'm still seeing some flows come in here at the highs, so they might just continue to push. I think I got to go to exit, but hey. Anyways. Such an interesting day to me. You know, this kind of day would be the most frustrating and upsetting for me as a beginner, because you know, I would be over here trading the S&P 500 and it'd be stuck in a range and I'd be like, what the heck? Why is nothing working? Oh, the treasuries, or sorry, the volatility is just so tight. There's no trades, right? So at the beginning, I would trade it and I would just get chopped up. And then I started to learn, oh, okay, they're like selling volatility. We're stuck in a range, so I don't want to take a trade here. And then it would just take off for no reason. And I'd be like, what the heck, right? I decide not to trade it, and then trade actually happens and I miss the bus. So how did I do it today? Here it is. I'm in a range. I'm stuck in the trade. I stick with it. Why? Because I have things that I think I know what the future flows are going to be. I didn't think that Feds Waller was going to say something that aggressive, but like after he started speaking, I was kind of like, oh, okay, the Fed speakers are actually going to help us here today. And I know that there's a treasury auction and that the CTAs have been covering over a longer time period. Those are all long flows. So everything that I know I have, and I know that those are kind of like small and very speculative flows, but they're all long. So what do I want to do? I want to go long. When it came back down, I wasn't looking to sell it. I wasn't looking to reverse the trade. I wanted to go long because I knew what the flows were supposed to be. And I just had to stay in there long enough for it to come through. There was luck involved in it for sure, but a younger trader me would not have gotten that and would have been really frustrated, right? What was the difference? Having an idea, having an opinion on what the flows were going to be today. Might be a horror show tomorrow. Credit Suisse survey expectations, USB survey. I don't know. Those aren't usually particularly big movers for the markets, though. I am very interested to see what the market does with this now that we've spiked back up. If they just clamp back down on volatility, I don't think that they got pushed out enough to really screw the options traders up. So the S&P may go back to being range bound, except for that we've got GDP tomorrow, and that's a pretty big number. So we'll see what that one is. It looks like there was at least 5 ticks more in this from me because I got it at 3.6, right? We may as of yet get 3.35, but that's not going to happen until I'm long gone. Because I'm about to end the stream right now. So I appreciate it, guys. It was a great stream. we had great, man, all over the place, but great conversations. We had 3 separate, one was about the trade, one was about cars, and one was about YouTube. I need to look back at, I need to not forget that this whole thing about Google changing the personal ad things. Does that mean you can't give personalized ads for financial products anymore? That's a pretty big deal. I need to find out more about that. But I'll see you tomorrow. Stay excellent, team.